Okay, everybody. Looks like we've got a good quorum here, so we're going to get started. Thanks for joining our webinar. This is part two of a two-part series about lease administration auditing best practices. Today, we're going to be covering operating expenses and taxes. Be sure to tune in to our previous episode, which was CAM and utilities. So basically, what we're doing here is breaking down over two webinars how tenants can essentially audit all the expenses that are happening in their portfolio on the lease and portfolio level. And thanks to those who are joining for the second installment of this. And we'll be sure to share some information about how you can access this webinar after the show. We're going to run through a quick agenda here. We'll do some introductions for myself and Denise. We'll define what is a lease audit. We'll talk about the different types of commercial leases that exist and why the structure of that lease might dictate the nature of your audit. We'll go through all the definitions of CAM and operating expenses, as many under the sun that we can cover. We'll talk about how base years work and how you can actually reconcile the landlord's expenses to the expenses that you've actually been charged. And then we'll go through the nitty-gritty of how you actually perform that audit. We'll leave some time at the end for Q&A. As we had experienced in the last webinar, we did have questions flowing through. If they're topical for what we're talking about, maybe we'll pause and answer those questions, but we also might just wait till the end to answer a bunch of them as well. So with that, let's kick this off. My name is Matt Giffune. I'm the co-founder of Occupier. We're a lease lifecycle management software solution. We power tenant leasing workflows from transaction management, site selection, lease negotiations, all the way through ongoing lease administration of the portfolio and lease accounting, closing of the books in compliance with ASC 842, IFRS 16 lease accounting standards. So our customers are typically either large corps or mid-market companies or restaurant chains or franchise groups that are looking to transition from a manual way of doing things into an intuitive software platform. So enough about Occupier, but I wanted to bring in our special guest, Denise Hinkle. Denise is an advisor to us as a company here at Occupier, but she's also a subject matter expert in all things leasing, from negotiations to administration to reconciliations. She has deep experience working for some of the largest companies in the world on making sure that they're covering their real estate expenses. So with that, I'll have Denise introduce herself, say hello, and we'll jump right into the content here.
Well, hello, everybody, and thank you very much for joining us today. And thank you to Matt and the Occupier team for having me tag along for this topic that I'm really passionate about. As Matt said, my name is Denise Hinkle. I have been working in corporate and commercial real estate my entire career. Started out with an accounting background and got into the industry because it was dumb luck, only job that I could find long time ago. I have worked on behalf of landlords, on behalf of tenants. I have led the lease consulting practice regionally for a Big Four accounting firm and worked as a service provider as well. So I've really seen this industry and these issues from a lot of different angles, which gives me kind of a unique perspective as to what, tenants and others face when trying to manage and administer their portfolio. I've done everything from like property operations to dispositions, acquisitions, development, you name it. I have had a hand in it. So I'm really excited to be here today and ready to get cover this topic and jump in.
Awesome. It sounds like somebody had noticed that our chat functionality is either disabled or not working, but let's just use the Q&A, I guess, to communicate as a group. All right, Denise, what is a lease audit? Let's get into it. Obviously we covered this on the first episode of our webinar, but maybe we could refresh everybody on what exactly is a lease audit.
Sure. So in very basic terms, a lease audit is just the confirmation or review of the financial portions of the lease. We covered in the first three, you'll see the three green check boxes: security deposits, tenant improvements, and utilities were covered in the first part of this series. So if you missed that, I would encourage you to look it up and go see it. And maybe we'll distribute that link as well at the end of this webinar. But you're really from a tenant's perspective, really just trying to get it right. You're trying to make sure that as a tenant, you're paying what you were obligated, what you agreed to pay for at the negotiation of the lease.
All right. And obviously the follow-up question to that is like, why is this important? Obviously it comes down to dollars and cents, but there's obviously other benefits as well.
Sure. So the biggest benefit to this is to make sure that your from a tenant's perspective that your financials are in order. Because in reality, things, and we're going to focus on CAM, but in general, the items that you're looking to confirm as a tenant are those that are primarily controlled by the landlord. The landlord really controls security deposits, the holding of that security deposit. They're incurring the expenses for common areas, and in many cases, billing that back to the tenant. So in effect, the landlord is spending the tenant's money, and the tenant really should, ensure that those funds are being spent appropriately, and that everything that you negotiated up at the initial portion of your lease is being applied and abided to.
Yeah, that's what I was going to mention as well. I mean, I spent 10 plus years as a tenant rep, broker advisor to companies, and the process of securing the space and then painstakingly negotiating that lease is so intense, and it ends up with a 100-page document that it would behoove you to make sure that that contract is being adhered to on both sides, right? This isn't an adversarial situation, but you and your landlord signed a contract, and this is how the building needs to be run and operated in order to be in compliance with that lease. So it really should be something that companies are doing on an ongoing basis.
Yeah, and in reality, Matt, I mean, you've seen it from your perspective as well, is that what happens with these leases is that they're negotiated between, a tenant, and on the landlord side, you're going to have, brokers and property managers and attorneys that are representing their respective parties. And then that document is handed off to either a property accountant on the landlord side or perhaps a lease administrator that is charged with creating these types of charges on behalf of the tenant, and they don't have any insight into all of the negotiations and all of the deal points up to that point. They're just looking at a document trying to apply it, and they might not be in the best position to do that.
Right. They don't have that historical context of like, how did we get here? They're really just kind of setting up the accounts and making sure that the bills are being charged.
For sure.
All right. So let's jump into these lease structures. So obviously, this is part of the negotiation up front, but I would imagine that you get out of the fog of war of a lease negotiation, and you get into that first statement of CAM reconciliations. The first question you should ask yourself is like, how is my lease structured, and like, what do I owe, and what is the landlord responsible for? So walk us through these three kind of most common types of commercial leases.
Sure. And I'm going to preface this by saying, like, I have seen different definitions than the one that we're presenting today. I think it really depends upon the company and the internal organizational structure, and whether you're on the landlord side of this or the tenant side of this. But for today's conversation, let's go with these three. The first is the gross lease. Really, if you evaluate the gross lease, it and how you can tell the difference among these three really is who is responsible for procuring and paying for the services such as repairs and maintenance, utilities of the property, not necessarily of the premises, but the overall property. In the gross case, the tenant is responsible for procuring the services, everything from janitorial to landscaping to perhaps the utilities, and they procure it, and then the tenant, also pay for those directly to those service providers. Gross leases, in my experience, happen most commonly where a tenant is 100% pro rata share of the building, and they're not sharing services with others. Would you agree with that, Matt, or have you seen other cases and other definitions?
Um, I believe that you're actually talking about a net lease, right? Correct? Like that's when the tenant is responsible for pretty much paying for everything. And a gross lease, in my experience, is the landlord is essentially billing back all of those operating expenses to the tenant under a base year agreement.
Yeah, so you got me. That is that triple net lease. My mistake. I misspoke
Yeah,
there.
it's all good. Hey, we're not perfect. We're
Completely
all human
backwards.
here. Yeah, but exactly. Like in my experience negotiating a gross lease, which is typically what you're seeing in like a multi-tenant office building or like a multi-tenant, flex or industrial building, industrial, usually triple net. But in the gross case, I'm advising the tenant that, look, this is going to be your base rent. What's included in this base rent are all of the expenses that the landlord incurs to operate the property. Every year, they're going to true up those costs, and you're going to pay your pro rata share of any of those costs above and beyond your base year. And we'll get into what a base year is later.
Yeah, see, for me on the other side of that, and I completely misspoke, and I'm sorry for that, but the gross lease would be the tenant is paying to the landlord a sum for base rent, which is inclusive of all of the
Correct.
expenses. So there isn't necessarily a chargeback per se
Yep.
of those expenses. In the modified gross lease, those types of leases, in my experience, are where the tenant pays, a base rent charge plus a separate charge for, say, CAM or operating expenses or property taxes, where the landlord is allocating those back to the tenant. So the landlord's in control of, procuring the expenses and then charging the tenant for their share.
Yep. And in the
And we
triple
are going
net
to cover,
example, yeah, and the
yeah,
triple net example is what you said, is it's typically like if you are a full building occupant, right? If you're the only tenant that is occupying either like an office tower, office building, or a, specialty industrial facility where, you're using it for your own business's purposes and there's no other occupants in that property, that's typically when you see that triple net structure, which is the tenant's pretty much responsible for everything out other than the base rent.
yeah, for sure.
Okay. Let's review some of these more common elements of what OPEX and CAM are. And obviously, these might vary by the building type. It might vary by the use of the space. But Denise, let's run through some of these bullet points here.
Sure, Matt. I think we may have slipped a slide.
Oh,
Did you have a slide right before this? Maybe we have skipped one. There we go.
yes, I
Before
did.
we before we go to that next one and get into the details, I want to talk a little bit about like what common area maintenance is. And if you look into your lease, common area maintenance, and there are a couple of different words that can be used to define common area maintenance. It might be called common area maintenance. It might be called operating expenses. It might be called property expenses. But really, what this is the group of expenses that are procured and incurred for the common areas, which leads to the next follow-up question, which is, what is a common area? A common area is really a space within a property that all tenants equally have access to. So think of things like common area lobbies when you walk into an office building, sidewalks, parking lots. It could even include like HVAC space or back of the house space that houses the equipment that provides heating and air conditioning for the entire property. All those are considered common area spaces. Are there exceptions to that? Absolutely, there are exceptions. There are exceptions to all different kinds of things in a lease, and this is one of those areas. If you have, say, restrooms that are on a floor that is a single tenant floor in an office building, I would argue that those are not common areas. They can't be accessed other than by the tenant that occupies that floor of an office building. Or if you have concession space, health clubs, really popular amenity now in many buildings. If your health club is subject to a fee that is, charged to use that health club, I would argue that that's more of a concession and more of a business and less of a common area. Even if it's available to the tenants, only the tenants that choose to pay the fee to join that health club have access to that space. So it's really about control and access when defining what is a common area.
Yeah, and there's other cases where there might be a fitness center that's just available to all the tenants, in which case, they're not charging for it. So that is actually common space, like, or like an auditorium or like breakout conference rooms, any amenity space that could be accessed like without really paying for it.
Right, right. And again, the fee is really kind of key into defining, what is applicable in this definition. look to the lease. It will definitely define what is common area.
Which gets into our next slide, which is, okay, the landlord is responsible for maintaining those common areas, so they need to supply services to those common areas, which is when we get into the nitty-gritty of the things that you're paying for.
Sure. And the lease will also, have a definition for what these either operating expense or common area maintenance expenses are. And it will start by common area expenses include all expenses incurred for the repair, management, yada, yada, yada of the property. There are a couple of downfalls and a couple of pitfalls that you can look for in this type of language. What you're looking for in that definition is you want to make sure that you don't have anything other than normal operating expenses. So when you look at this from an accounting perspective, normal operating expenses are going to include things like lighting for the common areas, landscaping, cleaning and janitorial, security, and a whole host of other things that the landlord, in their best business sense, must provide or does provide for a property. The pitfalls come is when you look at these definitions in your lease and you see words like replacement, reserves, depreciation, other things that would indicate that it's not really an expense, but a capital expenditure as defined from an accounting, viewpoint or an accounting lens. Always good to have, words like GAAP expenses in your lease. GAAP meaning generally accepted accounting principles. That can kind of protect the tenant and really kind of give a solid definition of what is and isn't included. In that section of the lease, you're also going to see a very long list of exceptions. Operating expenses or common area maintenance expenses shall not include. And you want to look for anything that's outside that normal repairs and maintenance. Again, reserves, depreciation, replacement, things like leasing costs, anything that doesn't relate to the operation of the building. Leasing costs would be an example, like brokerage fees that are paid,
Marketing
commissions that
expenses.
are paid, marketing expenses and advertising, and all these other things that don't relate to the actual operation of that building. Matt, you've been involved in negotiations of these. I would think that this is a really common area for a lot of negotiation.
Yeah, and obviously market by market, there's different things that could factor into how these things are defined. Like, so for example, I'm in the Northeast, so snow removal is something that is always a wild
Yeah.
card, and that's one of those things where, as a broker advising tenants, you're always looking for things like, is it possible to cap certain expenses, right? So like in the other section here, you have property management fees, right? The property managers need to obviously get paid to do their job. That usually comes out of the building's budget. Can we cap that, right? Is there a cap of 2 to 3% of the total operating expenses of the property that the property managers are going to basically be paid? Because there's certain situations where you don't know what the market is for how much it should cost to do these certain things. So you really got to do your homework and like have an advisor to help you like identify which one of the things in this like huge list of operating expenses and common area maintenance charges that you could actually try to control. Because we're going to get into it later, all of the bills that you're going to be charged are all retroactive. So you really have a little control over like what the landlord actually does throughout the term of your lease. It's just a matter of like, where are the checks and balances that you could build into your negotiation so that you have some control over what those expenses are that are being incurred. And Denise, property taxes are one of those things where I think most tenants just assume like, oh yeah, your landlord pays the taxes and it's just gonna, escalate at a certain amount every year. And, that's just baked into my rent. But, are there situations where maybe the landlord should protest? Maybe they should be trying to lower their property taxes, and that benefit
Yeah.
should flow through the tenant.
Yeah, it's amazing, and I'm gonna preface this by saying like along my career path, I worked for some landlords or owners that knew how to split a dollar 12 ways. They are not incentivized really to give money back to the tenants. I mean, I have seen it all in my career. Everything from, you know, real estate taxes that have been protested, landlord takes the credit or takes, you know, a cash payment from the government, you know, in response to their protest and never passes that back to the tenants. Or, um, you know, many other examples. I mean, I you know, saw once where if the landlord was under their operating budget, they would just throw capital in it to meet their estimated budget for the year. Therefore, they still didn't have to give money back to the tenants, but they were recovering part of their capital, part of their investment. Crazy, crazy stuff. You talk about like management fees, and you know, we have a question here in the chat that said, you know, they're trying to sneak in rent for the management office. What do you do when you see a management fee come through and an administrative fee, and you're paying for the property manager's salaries plus the rent on the space of the office? It seems like you could be double, triple, quadruple dripping, you know, dipping in recovering those expenses. You really need a professional that knows how to read that lease, that knows that like the placement of a comma in a sentence can alter the intent and the meaning of whatever clause you're looking for. And you really need an expert that's willing to dive in and take that literal look at the lease to know what's allowed and what's not.
Yeah, that's a really good point because um, as a broker previous life, like I had no like legal expertise, right? Like I knew how a lease was structured, and I can advise companies on how they should think about certain concepts. But I would always recommend um, a real estate attorney in my network to negotiate this lease on behalf of the tenant. A lot of times, companies might have an in-house counsel, or they may have their own law firm that they want to use. But if that lawyer doesn't have like leasing experience, it's really easy to miss some of these things. So I'd always recommend that if you are going into a lease negotiation, hire an attorney that actually knows how to negotiate a lease.
Yeah, I think it goes beyond just having, you know, an attorney that works on your behalf. I mean, you have attorneys that are going to look at it from a legal perspective. You really need to have somebody, even if it's within your own team, that knows how to interpret that legal document and knows how to apply it. And that skill set is kind of a blend of legal and property operations and accounting all mixed into one package to make sure that there's no, you know, obvious mistakes.
Which brings us into our tips on the negotiation side, right? So tip one here is negotiate every term of your lease, right? Your term, you should know all of this stuff before you sign or you renew your lease. When you're going into the renewal period, look at the lease again. And maybe you missed something, or maybe there's some language that could be improved, or something that you can cut out of the expense budget that was previously being charged for. So Denise, maybe you can walk us through like kind of how you can negotiate, build this relationship with your landlord, and make sure that like your CAM charges aren't like getting out of control as you kind of continue your occupancy.
Yeah, I think, you know, the first thing you, like you said, is this negotiation. You really need to have somebody on your team, internally, externally, that knows that if you have a common area maintenance expense definition that includes the word replacement, that you're agreeing to like capital expenditures and not just operating expenses. You know, sometimes, you know, get thinking out of the box. Send this new lease language to a lease administrator that's in the trenches with reconciling this and doing desktop audits on your behalf. Just say, hey, what do you think of this? What do you see? And the second thing I would say is like, if you're a tenant of size and you have some negotiating power, is kind of create your ideal lease language. Like, what is the language that you want as a tenant? What are the keywords that you don't want in that clause when you're signing that lease? That's point number one. Anything else that you can think of, Matt, in negotiations that really kind of will help, you know, clarify this area?
No, I think you brought up a good point with the if you're a if you have some negotiating power, if your pro rata share of the building is going to be more than 50% or like the majority of the property, then you probably have a little bit more leverage with how you could drive some of the language in all the clauses. I've seen situations where, I'm negotiating on behalf of a massive, like multinational global Fortune 50 company, and they literally have their own lease document and they force that upon the landlord. Now, landlords do not like that typically, but if that means getting Microsoft into your building for a 300,000 square foot full building lease, they might be willing to play ball with you on that. So, if you're a small, I don't know, retail tenant that's going into a 3,000 square foot space in a big center, you might not have that leverage. That doesn't mean you can't be savvy with the language that's in each clause.
Yeah, for sure. The second point on this slide is build your relationship with the landlord. Really take notice of how the building operates. When I would do lease audits on behalf of tenants, we would walk a building, like start to finish. We would ask for a tour, the back of the house areas, everything, so we could get a feeling. And we would get the people talking. We would look for things like simple things like, are there light bulbs that are burnt out in the lobby? Is there dirt in the corner of the elevators of an office building? Crazy things like that will give you an indication of how that property functions and the quality of the management in that property. Take notes, get the building engineer talking. You might find out that they're going to replace their HVAC system and you could be on the hook if your lease has that replacement word in it. You don't want to pay for that. And really, you're not asking for anything unreasonable here. You're just trying to make sure that you get it right.
Yeah, and we had a question come in while we were talking about the negotiation point, which is like, where does the lease start? Is it typically the tenants or the landlord's paper? I would say in my experience, and I venture to say this is true in most markets, is that the landlord is typically going to have their form lease. So when you get through the whole process of touring spaces, landing on the one that you want to occupy, you're going to have gone through a whole process of negotiating proposals back and forth with that landlord, and you're ultimately going to arrive on a letter of intent, which is pretty much the heads of terms that are going to be incorporated into the lease document. Most landlords will have their form lease document that is consistent with the clauses that you've negotiated in that letter of intent. Of course, it's going to become a much larger document because there's a lot more definitions and there's a lot more legalese that goes into those lease documents. But in my experience, you're typically going to be negotiating on the landlord's paper.
Yeah, I would agree with that. Unless you're a tenant of some size that has either a lot, you're looking for a very large portion of space, or you're, blue chip credit.
Right.
Then typically you'll have.
If you're Amazon and you're going to build a ground up development with a big industrial like landlord, or maybe even a local landlord, you might have the power to just drive your lease document through that process.
Right.
Uh,
And that leads into the third one here, which is, really monitor your CAM charges. Like ask for during your negotiating period, ask for what is the budget breakdown for the current year. Know kind of what the landlord has planned for that property. If they're looking to sell, to or market that property, you might see extra costs in landscaping and refreshing and painting and carpeting and replacement and refurbishment that you as a tenant don't want to be responsible for.
Totally. And we had another comment come through, which was the gross up clause of the operating expenses. We can get into that a little bit later when we start to talk about, the base year and how you're actually calculating what you're paying for. But the concept that was brought up in the chat was, you're going to be able to drive a certain, you want to base your negotiation off of like what would be as close as possible to a fully occupied building, so that you are not incurring the costs of the vacant space that's basically being operated as well.
Yeah, that's a really good point, and I'd like to, if take some time to dig into that here in a couple of minutes, because gross ups, especially in this current market where you have leased spaces that aren't occupied by people, can have a drastic effect on the expenses. Let's touch on that in just a minute if we could.
Absolutely.
And the last two here are ask questions and seek an expert advice. Ask questions, talk to the tenant next door, a floor up, a floor down, see what their experience has been with both the expense levels in the building as well as the services of the building. Are they happy? Do they have a beef with the landlord? What is their experience? And use that and file that away as you're looking at, negotiating your lease, and, when you're reviewing expenses as well.
All right, let's talk about real estate taxes.
Ooh, taxes. What a concept. Um, Taxes, interestingly enough, are not calculated the same jurisdiction to jurisdiction, county to county, state to state. There really is no one, set method or consistent method of taxing them. The big thing with taxes is number one is all of this or most of the information is publicly available now on the internet. If you have the property address or the PIN number, you can do some research and find out, what is the assessed value, when the assessment periods are, what is the tax rate, the mill rate, the multiplier, what is, all these other factors and how they go into the calculation. You can also discover whether or not those taxes have been protested, whether or not the landlord has received a refund for that particular taxing year. Always, 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 if you're being billed for taxes by your landlord, make sure you at least get a copy of the tax bill, an actual copy of the tax bill, as well as a copy of any invoices for services that the landlord is incurring to protest those taxes.
Audit rights. Yep.
Audit rights. Yeah. Both with CAM and with taxes, you need to make sure that you have those audit rights. Some leases are silent. My opinion, if the lease is silent on the audit rights, it means, hey, the landlord is spending money on behalf of the tenant. You're spending my funds. If I'm the tenant, I want to take a look and just validate that you're spending them appropriately since it's my money. There has been case law that has supported that theory in the past. Most landlords don't like it. And if you don't have any kind of rights written into your lease, you really need to consider that if and when you amend that lease or renew your lease for your space.
Yeah, we had a pretty specific question that came in here, Denise. I don't know if you see this, but it's from Frank. He's asking for property taxes for a lease based on AIR, Air Commercial Lease. Can the landlord allocate taxes based on the income approach, meaning whichever tenant pays more rent would have a higher pro rata share of the property taxes? Have you seen that?
I have not seen it based on the income approach. Usually your pro rata share, the only pro rata shares that I have seen with regards to taxes are based on square footage of the space. Now, if you have an air lease, you may consider trying to fix that contribution for taxes, or think of something solid in how that allocation is done. Other than that, I would say your best approach here is to just in your lease deem your pro rata share or that your share of the taxes are X percentage. Anytime that you get a situation where the numbers can be interpreted or massaged, the landlord could come out, recovering more than 100% of their real estate taxes. And that's not the intent of this concept at all. It's really to make the landlord whole. Have you seen
Thank you
it
for
in
that
leases?
answer.
Have you seen any other contrary to that, Matt?
No, I haven't. And that's just in my kind of narrow experience, but I think it's whatever's allocated, uh, mainly a pro rata share is usually what your kind of tax exposure is based on.
Yeah, I just have one more thought that I want to add on taxes, and that is in the case where a landlord's protesting taxes and they actually have a recovery from the assessor as a result of a protest process, is that if you are a tenant that has moved out of your space, make sure that you go back in subsequent years for a couple of years to see whether or not their protest was successful. Because once you have left the building, there's really no incentive for the landlord to go through the effort of trying to track you down to give you back a share of that recovery. So it might be up to you, the tenant, to just stay on top of it and go back and ask. Here in, I'll call it Crook County, Illinois, but Cook County, Illinois, which is the greater Chicago area, it can take a couple of years to actually see the results of a protest process. And a lot of tenants have come and gone, since that. But that, protest refund really should go to the tenants that were occupants and had leases during the protest
During that
period or
period. Yep.
during that period. So make sure you follow up.
Great pro tip right there. Okay, let's transition into the concept of a base year. Let's get a
Oh,
definition of that, Denise.
okay. So A base year lease is a concept where the tenant is responsible for increases in expenses for a consistent basket of services. So you're only paying your share of the overage of the expenses in what's called the base year. And that base year can be either the first 12 months of the lease, the calendar year in which the lease commences, or the first full calendar year during the lease period. You'll have to look to your lease to see how that's defined. But the concept is you're only paying your pro rata share multiplied by the increase.
Correct. And we'll get into some like negotiation tips on that base here too, because you don't want to get into a situation that the expenses in the property have escalated so much and your base year remains at a low basis, because then you're basically paying more. So the concept is whenever you have the opportunities to try to update that base year to the most recent basket of services so that your proportionate share of the increases remains somewhat budgetable and it's not going to get out of control.
Yeah, that's exactly right. Whereas, your typical lease audit for tenant that's just responsible for their pro rata share of the expenses looks to reduce that amount, reduce the total expenses, therefore the tenant pays a lesser portion of those expenses. The intent of the base year audit is to raise the base year or make those expenses in that initial year greater. So then the overage is subsequently smaller for every other year of the lease. So you kind of got to think of it in opposite.
Yeah, it's
Um,
a little it's a tricky concept, I think, for people that aren't like used to leasing space all the time to understand. And this is typical in a gross lease as well. We should mention that the base year is much more common in that gross lease situation where the landlord is actually paying for and procuring and providing those services.
Sure. And just a couple of quick tips on like if you're auditing the base year of your lease or you're auditing like year 5 of a lease that has a base year, is you want to actually look at the expenses or the services that were provided during that base year and compare them to the services that are being provided in a subsequent year. What we saw, especially during the pandemic, but even before that, is in certain markets, landlords have added security guards or added other services or added different types of insurance that makes that base year not comparable to what's being offered or provided by the landlord in that comparison year. So in those cases, I would argue that you need to go back and increase the base year retroactively to accommodate those new services, and you would just discount them either by an interest rate or a cost of living rate or the actual increases that that property has seen year over year.
Yep. All right. So what is a CAM reconciliation? How are you looking at making sure that all of this work gets, we've thrown a lot out there and it seems maybe it's a little bit daunting, but there is an actual process that you can go through to make sure that you're reconciling all of this stuff. And that's typically your CAM reconciliation process. So maybe you can kind of start with the definition of that and we can walk through how it works.
Sure. So typically what will happen in a commercial property is the landlord around November, December, usually most common December, will send to the tenant a statement of what the tenant's pro rata share will be for CAM or operating expenses for the upcoming year. And in doing that, the landlord is really presenting to the tenant their budget for expenses and saying, out of my budgeted expenses, this is what your contribution is in a tenant, and therefore your divided by 12, your new monthly payment is X. So that usually happens at the end of the previous year. Then we'll call it April-ish, ideally, the landlord will go back and say, okay, for the prior year, my actual expenses were X, my budgeted expenses were Y. Here is the over under, and your pro rata share, plus or minus of the difference, is Z. And to the extent that the landlord wound up spending more money than what they had in their initial budget, the tenant would owe that additional amount, their additional share, to the landlord. To the extent that the landlord spends less than what their initial operating budget was, that was provided to you, 1+ year ago, the tenant would receive a credit usually for that. That's overall how the process works. Here's the secret. The secret is that when the landlord is preparing these, they might have multiple buildings, hundreds of tenants that they're doing this for. They, I can guarantee, unless you are a very large tenant, are not going to look at your individual lease and say, ABC company only has to pay for this set of expenses, but they negotiated that they're not paying for advertising, they're not paying for administrative fee, and they're not paying for painting the lobby, whatever those exceptions are. They're going to say, okay, ABC company, you closely fit into bucket number 2, and I, as the property accountant on the landlord side, have created 4 different bucketed expenses. So I'm putting my tenants into buckets 1, 2, 3, or 4, and wherever they most closely fit, that's what the group of expenses that I'm going to charge back to them. Where lease audit really kind of comes into play is that if you know that the landlord is not looking at your specific lease, chances are you're being charged for some charges that you shouldn't be because you had negotiated your CAM clause up front when you signed your lease.
Right. So it's the one to many. You think you're the most important tenant in their whole portfolio, and you are, which is why you need those audit rights and why you need to complete the whole process. But on the landlord side, it's like many. It's like it's they're not thinking about it on a lease by lease basis. But that you're still responsible for going through and making sure that the expenses that you're being charged for are to the letter of your lease.
Yeah, for sure. And honestly, I mean, this, we'll say it again, this is not meant to be adversarial. Really, at the end of the day, the best position is that we get it right. The landlord's getting it right, the tenant's getting it right. And it should be no more, no less. It's really a compliance process as opposed to, you know, this tenant is going to come in and just make my life miserable. Really,
Yeah.
it really is. How do you perform it? Where do you start? The first thing is to, gather and review your lease documents. Read your lease. Read your lease a second time, read your lease a third line. Make sure that you're highlighting what you have agreed to include in those expenses and specifically what those exclusions are. Is it capital expenditures? Is it capital expenditures except for those that are governmentally mandated or cost saving? Is it, I'm not paying for the landlord's cost of doing business? And then look for those exclusions in the documentation that you receive from the landlord. If you have a base year lease, you want to do that process for both your base year at least once and your comparison year or the current year. Make sure that you have the rights to do this. If you don't have those audit rights, it can be difficult to get access and have the landlord actually answer questions.
Yeah, one tip here from a leasing negotiation perspective is before you sign that lease and when you're looking at the potential overall kind of financial exposure that you have as a tenant, ask your landlord to provide the previous 12 months, or if you can get it, the previous 24 months of expenses. They might not give you the line item detail of each operating or CAM charge, but at least you'll get an understanding of like, okay, like how have these escalated over time, so that you can have an understanding of like when that first reconciliation statement comes through, it's consistent with what you expected it to be.
For sure. And you really need to, again, it goes back to the lease, get that trend analysis. So you're looking at prior years. If you're in year 1 of your lease and you have the prior 2 years of expenses from negotiation, look at that and put that in a chart and look at the trend of expenses over time and just add to it. Every time that your landlord gives you in either an estimated or an actual expense statement. So it'll be very easy to identify, oh, there's a huge bump in repairs and maintenance this year. What happened? And then you can ask the question. Know if you have a base year, know if you have what's called a stop. A stop in a lease is just basically a fixed base year. So it could say, tenant is responsible for expenses over, $15 per square foot. Know if your operating expenses, does that include taxes and insurance, or a taxes and insurance billed separately under a separate base year, perhaps. And then understand, anything else that would be included, like gross up. We talked about, somebody raised gross up earlier. Gross up is a concept where the landlord artificially, I'll put artificially inflates variable expenses as if to reflect those expenses as if a building were fully occupied, which leads to, you need to verify the occupancy of the building. Occupancy of a building these days can be really tough to nail down, partly because we have a lot of lease spaces and not a lot of people actually using those spaces. So I don't know, what the strategies are there. Before COVID, what we would do is take a look and just say, like, give me your occupancy schedule, Mr. Landlord. And basically it would be a rent roll minus the rent and the financial pieces, but just who is occupying spaces within the building to come up with an occupancy percentage. That is not so easy these days because you have leased spaces, like I said, and people not occupying them. So things like trash, paper goods, other expenses that vary with how many people are in the building can't be analyzed as easily. So it might, you might need to have some discussion with the landlord on how, what's fair. And that's really what you want to get to, is what's fair.
Yep. And so you've negotiated this lease, you've occupied your property for the first 12 months of your lease. What happens? You get to April and you get that reconciliation statement. That's when the real work starts.
Yeah, truly, that's when the real work starts, because the landlord can estimate whatever they want to estimate at the end of the year, and you really, as a tenant, don't have your opportunity to do the lease audit or review those expenses until those actuals come in. That's really kind of the trigger date. Make sure you're paying attention to, like, if you only have 180 days to notify the landlord of your intent to audit, if you have those audit rights, that you are within 180 days and you're tracking that in your calendar. Because I don't know very many landlords are going to be, yeah, come in and take a look on day 181. It's not going to happen.
Yeah. So, like, what
Also,
are the? Oh, no,
go
keep
ahead.
going.
I was going to say, also know that this is involves a lot of work on behalf of the landlord. So really kind of go into it knowing that you're creating work for them, and sometimes they're not going to be happy to it. So try to really minimize the impact. Request only the documentation that you need to request. Ask appropriate questions. And by all means, when you come up with some sort of conclusion at the end of this process, make sure that you can cite the section of the lease that supports your argument. Because if you can't support it in the lease, there is no way that you're going to be successful at, negotiating or settling this thing after the fact.
Yeah, give us some examples of some of the documentation that's like reasonable to be requesting.
Sure. So the first one would be if the landlord just presents you, my total operating expenses are 2,438,000, whatever the number is. You want a breakdown of those expenses by category. You want to get as detailed as you can. From there, if you see something that looks to be amiss, you want to ask about a specific category. The most common one is going to probably be repairs and maintenance. You might say, like, tell me what happened in repairs and maintenance. Did you have any projects? Give me the breakdown. But if you have formal lease audit rights, you can go as far as saying, like, please send me copies of these specific invoices. Please send me a copy of your gross up calculation. Please send me a copy of your occupancy schedule. And there's usually an entire list that a lease auditor will ask for if they're having to go in, if it's appropriate for them to go in and do a full lease audit. I have requested everything from general ledgers to invoices, service contracts, construction contracts, miscellaneous calculations, anything and everything. Do a site visit, see if you can walk the back of the house space with the engineer. And really, you want to take a very holistic view, but be very focused. Only focus on those areas that are A, material, and B, where you think that there is something that just doesn't seem to be quite right.
Yep. Before we wrap up here, not everyone on this call or who's leasing space is an expert like you are. So how would you kind of recommend that people become a little bit more knowledgeable about this, or how would you um, suggest that people seek out expert help?
Sure. Well, I think you can certainly reach out to me. I'm always happy to answer questions. I've been doing this a very long time. That would be one resource for you. Really look at your lease administration team to see if you have this expertise in house. And really, what we talked about earlier was that kind of blend of the ability to dig through and interpret a legal document, plus the accounting piece, so they can understand what's an expense and what's capital, plus knowledge of how a building operates. Like, what is the landlord doing to operate the building? Is it truly operations, or is it something else? Um, not all lawyers can handle these issues. They need to be versed in real estate issues. Not all accountants can handle these issues, because you have to have that background in real estate to really know what you're looking at. So it's really a pretty specialized view. There are a handful of providers that will do lease audits, as a service that they provide that. Or you hire somebody to give you that training and that expertise to build your team in house to be able to handle this on an ongoing basis.
Awesome. And just to wrap up here, as the first point Denise made was read your lease, understand where all this information lives. As a quick plug for Occupier, we are a platform that allows you to access all of your lease data, whether it's financial, date, or legal clause driven in one place. So obviously, we would suggest that if you have a certain amount of leases, that could potentially create administrative burden on not only the day-to-day operations of your property, but in the event of a lease audit, it's always better to have that information organized in one place, because the last thing you want is to go into a lease audit and then realize, I don't even know where my lease is. I think it must be with that attorney that helped negotiate with it. I'm going to reach out to them, and then it's basically time and risk that is on the table if you don't have access to all of your data in one place. So we help companies organize their real estate portfolios into one central place, and then provide all the workflow tools that allow you to successfully complete a lease audit.
Yeah, I'm going to go take it one step further and say, in addition to tracking all that lease data, is you also need to be tracking if and when you're receiving your reconciliation statements. There have been many cases where, tenants are supposed to receive reconciliations, but you might have a non-sophisticated landlord that never reconciles expenses. And, somewhere down the line, the tenant is owed a whole lot of money.
Yep. Well, Denise, this has been enlightening, educational, and I hope helpful to our participants. We're coming up on the end of the hour here, and it looks like our Q&A has slowed down. But if anybody has any final questions, feel free to fire them in right now, and we'll try to get them answered in the next 5 minutes. But as we wrap up, Denise, if any of our participants wanted to find you and reach out, how would they do that?
Sure, you can, reach me through email. My email is denise@denisehinkle.net. Or you can reach me through Matt, and Matt could put us in touch. Anybody on the Occupier team can also put us in touch. That's probably the easiest way to find me.
Awesome. Well, thanks everyone for joining. Just a quick plug for our next webinar. We are going to get into the details of ASC 842 compliance, policy and controls around how you could maintain compliance with ASC 842 if you're subject to that standard. That's Thursday, November 8th at 2 p.m. So mark your calendar for that. And thanks everybody for joining. Have a great day.
Have a great day, everybody.